Hi friends, welcome to the Warrior series of BFM. In Warrior series, as you can see, we'll be covering the case studies plus MCQs. Case studies will be related to numerical also, theory also. MCQs also related to numerical theory, same as your paper. In your paper also you get roughly 40 marks case studies. Out of them, 25 marks are numerical case studies, means 5 case studies per means 5 marks into 5 numerical case studies. Then remaining one-liners you have around 10 to 15 one-liners as numericals. So similarly we are covering over here also. So watch the complete video, share it with your friends, like the video, subscribe to the channel, click on the bell icon. Today I will be covering the theory questions mainly related to risk management. Okay, so watch it fully, share it with your friends, like the video. Let's start. So now let's cover the risk management part. Okay, risk management. So first one, internal and external loss data collection is required to estimate a loss on account of. So internal and external loss data is required to estimate the loss on account of. So internal and external data happens because of what? Is it because of market risk, credit risk, interest rate risk, operational risk, or exchange risk? Generally it is internal and external loss data. These two terms are always used for. Why? Where? Where are they used? Comment section, check. These two terms are always used for exchange risk. Always remember, internal and external loss data is always used for exchange risk. Got it? Next. Compliance risk is a part of credit risk, market risk, reputational risk, a separate category by itself, and exchange risk. So compliance risk is a part of, yes? See, it depends on bank to bank. Okay, compliance is actually an operational risk part. Operational risk part. Actually, it is operational risk. But among the options, if you want to check, if among these options, if you want to give the answer, then it is near to exchange risk. Then it is near to exchange risk. But actually compliance is a part of operations. Okay? So check in the exam if they give you the answer as operations risk. Operations. Then tick mark on operations. Okay? Credit, market, ops, reputational. These will be the 4 options given. Now, if you have a separate question like both are given, operation and exchange, then which one? Then operations. The best answer is operations. If it is not given, then exchange. Okay? Credit risk does not arise from which of the following? Risk of default, risk of erosion in the value of the security, risk of asset quality, risk of banks' credit policies, risk of deterioration in the credit rating. So credit risk does not arise. See, this is a tough question. Does not arise because of what? Credit risk. Yes. Because of what? Risk of default. Yes, it can be there. Risk of default can be there. Isn't it? Default risk can be it's a part of credit risk only. Credit risk has 2 parts, country and counterparty. Counterparty means default risk. Risk of erosion in the value of the security. That's also right. If security is gone, then loan becomes unsecured. So that is the risk of credit. Risk of asset quality. Asset quality. Okay. Suppose if the assets go on reducing, they deteriorate, then there is a problem. Asset quality. Risk of banks' credit policies. credit policies, okay, means banks own policies, and risk of deterioration in the credit rating. Now, which is the nearest answer? Does not. All these four will directly affect, but this one will indirectly affect, not directly. You can say it will affect the this credit risk, okay, but not directly. Remaining all will do directly. Credit rating is done by the external agencies, okay. So next, RBI conducts off-site surveillance of banks by conducting AFI, by regular inspections, by calling for details on various parameters between two on-site inspections, by writing letters and calling for information, by installing surveillance cameras in the head office. How does RBI do this off-site? Yeah. Firstly, what is on-site and off-site? Firstly, understand that. What is on-site and off-site inspection? See, RBI is very clear about it. RBI says per year there should be an on-site inspection for big accounts. Simple. Now, per year there will be one over year, 1 over year. So this is on-site. On-site means directly going to the branch or the bank and doing the inspection. In between, to check the quality of the assets. Now, year to year is a big period. So in between, if they have to check, what will they do? They'll call for the documentation. So calling for the details on various parameters between two on-site inspections. Documents are called in the RBI's office. Nowadays we have software. Banks are told directly to upload the documents. Okay? So this is off-site. Got it? This is off-site. Next, read this. Financial frauds are called white collar crime because, why are they called white collar crime? Financial frauds. They are committed without intention. They are committed by people who are not aware of the consequence. They are committed by educated and sophisticated persons who are otherwise respectable. There is no dirt in the collar while committing crime. They are committed by white people. White collar, isn't it? Financial frauds are white. You check various companies, Vijay Mallya, Nirav Modi, all these were respected on Economic Times, all the CNBC news, everywhere these guys were there. Right? They are committed by educated and sophisticated persons who are otherwise respectable. Ramlinga Raju, Satyam, head, right? White collar. Got it? Dash is a tool in the hands of RBI for effecting off-site surveillance. Off-site. Various control returns, camels, parameter information, statutory return under Section 42 of RBI Act, AFI, monitoring through revenue intelligence officers. So which is the tool? Yes? Which is the tool? The tool is very important tool that is called as camels. Okay? Camels. Got it? Camels and calcs. Two important tools are there. Kindly study about them. Camels and calc. 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 These are the two important tools. Okay, large loan. This relates to large loans and this relates to many terms are there. Okay. Capital adequacy, management. Okay. Various 5-6 terms are there. Kindly study these without fail. Camels and calcs. ICAP means Internal Capital Adequacy Assessment Process. International Capital Assertment Arrangement Program. Internal Capital Assertment and Adjustment Process. internal capital adequacy analysis process, integral capital assessment analysis program. So ICAP means what? Yes, everyone think? These all questions are there in your CAIB also. Kindly remember. Okay? Yeah, these all are there in CAIB also. Kindly, I would suggest you should all give CAIB. Okay? Somebody is asking me in the comment section that what is CAMEL's full form? Okay, I'll give that. First, let's do the answer for this. So the answer for this is ICAP, Internal Capital Adequacy Assessment Process. This document is prepared by each bank. RBI compares the ICAP of the bank with its standard ICAP and then gives the rating. If there is any deviation, RBI points it out. Got it? So ICAP is Internal Capital Adequacy Assessment Program, very important one. Yeah, I was talking of CAMELS, right? So CAMELS means what? Capital adequacy, asset quality, management, earnings, and what? Liquidity, and last one is sensitivity. Okay, it's CAMELS, S, sensitivity. Okay, capital adequacy, asset quality, management, earnings, liquidity, and sensitivity. Got it? Clear? And calc means, what is calc? Let me see how many of you can answer this. Calc, CALC. I'll give you the hint. It is large loans. Yeah, it is large loans. So, capital adequacy, asset quality, liquidity, and compliance and systems. Okay? Capital adequacy, asset quality, liquidity, compliance, and systems. It's CALC, S. So these are all related to large loans. These are not related to smaller loans. CALC is mainly related to large loans. Okay? So done this. ICAP, everyone got it. Internal Capital Adequacy Assessment Process. Very important term from your exam point of view. Because RBI is very strict on ICAP now. Every bank has to focus on ICAP. Okay? This is the major part in your module B of CAIB also. See, everyone should give CAIB. Okay? Prepayment of loans or premature withdrawal deposits denote. What is this type of risk called as? Prepayment of loans or premature withdrawal, credit, operational, embedded option, group, and default. The answer over here is embedded option. Kindly note, embedded option risk means what? Any depositor tomorrow or FD holder can come to you and give back your FD and take back the money. So premature withdrawal. Similarly for loan also. Any depositor, any loan borrower tomorrow can come to you and give back all your money and close the loan. So you'll say, what is the problem then? The problem is in ALM, asset liability management. If any big loan gets closed, you have a huge sufferings in the ALM. If a big deposit gets withdrawn, then you have a problem in the ALM, asset liability management. Very big issue for the banks. Okay? Depositor's photo is not obtained while obtaining the account in many cases. What type of risk is this? Market risk, credit risk, business strategy risk, internal control risk, exchange rate risk. So simple. Yes? Very simple question, but very basic also, but required also. Yeah? So depositor's photo is not taken. It's a internal control. Okay, it's an internal control based risk, isn't it? Because remaining all are related to this finance, this is basically compliance and basic internal control. You are not following the systems. If the income tax deducted from the depositor's account is not remitted within the stipulated time, it constitutes internal control risk, reputation risk, earning risk, compliance risk, and credit risk. Very simple. Income tax you have deducted from the client's account. So you have to give it to income tax department. If you don't give, what are you doing actually? You are committing a fraud. Isn't it? You are committing a fraud. You are taking the money from the client and not giving it to the concerned department. So basically it's a compliance part, compliance risk. Okay? A doubtful asset for more than 2 years account has a balance of rupees 9 lakhs with a security of 5 lakhs. The account has CGT-MSE cover, guarantee cover of 75%. What is the amount of the provision? Think everyone. Think of it. What is the answer? Just think of it. Everyone try to give the answer as much as possible. I'll show you. See this. We'll first solve this. Okay? What is it? Doubtful for more than 2 years. It's a doubtful loan. So if it's a doubtful loan, what is the provisioning for doubtful loan? And that also for more than 2 years. So it will come under which category? It will come under D2 category, doubtful 2. See this, substandard, D1, D2 and loss. Right? This is a general classification. Substandard, D1, D2 and loss. Okay. So here what are you doing? You are having substandard is for what period? Substandard is for what period? Up to 1 year. 1 year. Doubtful is again for 1 year. Doubtful 2 is for 2 years. So what is it given? Doubtful for more than 2 years. So it is in the doubtful category for more than 2 years. So where will it be? See, total doubtful is for what? 1 year and 2 years, 3 years. So total doubtful is for 3 years. So it's told it's in doubtful category for more than 2 years. So it will be what? Doubtful 1 is gone. So it will be in doubtful 2 category. So now I am in doubtful 2 category. What is the provisioning for doubtful 2? D2. What is the provisioning for D2? D2 provisioning equals to 40% for secured and 100% for unsecured, right? 40% for secured and 100% for unsecured. Got it? So now what will we do? 40 for secured, 100 for unsecured. So now let's divide this. 9 lakhs is the total loan amount. Out of this, 5 lakhs is the security. 5 lakhs. So secured is 5 lakhs. So let's divide this. Secured and unsecured. Secured is what? 5 lakhs. Unsecured is 4 lakhs. So what is the provision for 5 lakhs? 40%. 40% into 5 lakhs. So that is simply 2 lakhs. So 2 lakhs is the provision. Provision is 2 lakhs. 5 lakhs into 40%. This 40%. This you will multiply it over here. Okay. What about this unsecured? You will multiply with 100. But there is a problem now. What is the problem? CGT-MSE guarantee cover is for 75%. Now this CGT-MSE guarantee cover is given the government of India, central government. And MSE means micro and small enterprises. So CGT-MSE guarantee is always given to those banks who are the members of CGT-MSE, not to every bank. So now this is 75%. This is always given for the unsecured portion, never for the secured portion. So whatever is secured, leave it. Unsecured portion is 4 lakhs. 75% out of that is insured. So do this. So 4 lakhs equals to what? 3 lakhs plus 1 lakh. Because 75% of 4 lakhs is 3 lakhs and this remaining is 1 lakh. So this is already insured. CGT TMSE. So no insurance, no provision is required for this. This already you have insured. What about this 1 lakh? This 1 lakh is totally unsecured. So if this 1 lakh is totally unsecured, what do you mean by this? You will require 100% provision. So here I will make a provision of complete 1 lakh. So what is my total provision now? 2 lakh over here and 1 lakh over here. So my total provision becomes 2 plus 1, 3 lakh. My total provision becomes 3 lakh. Got it, everyone? Clear this concept? Very. See, such questions are definitely asked in the exam. Surely there. Okay, so don't miss these questions. Very important ones. Okay. Now, before going, let me show you how to join the batches. The new batches are starting for crash course for CAIB. Join it ASAP. See, the crash course is starting on 24th of this October. So join it ASAP. All the numericals, objective questions, case studies, all are covered. Importantly, see this, you will be getting the mock test. The mock tests are full length, means full like paper, as well as chapter wise, both. So it's really useful for you. 10 full length mock tests are there. And the discount part, see the discount part over here is, right now you are getting, put the code, see, for that you'll have to remember the code, Y432, Y432, 79% discount plus 1% extra, 80% discount you are getting. So it's a huge thing, 80% discount, okay? So join ASAP. Also you can join the Mahapack, Increment Mahapack. See this, the Increment Mahapack of CIB right now is having double validity. Here you get 15 plus batches per subject, plus you get free question bank, plus you get formula bank, okay, free, all delivered at your home. So it's one of the best thing for you. Double validity means what? You buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. So it's a huge success, huge thing, okay? And the discount is same, 79 plus 1. But for that, remember the code Y432. See, this code is very important. Okay, 80% discount plus double validity plus 15 plus batches plus question bank, full question bank, all the 4 compulsory subjects plus formula bank, all the subjects. So it's a win-win situation. Join ASAP.